Good morning, everyone. I want to get through the long positions before talking about the overall market. The highest quality long position that we have for Wednesday is PVTB. PVTB was a recent long signal on the gap up. I already tried it once on a gap up, shook me out one time, trying it again, and it immediately shook me out a half on the 8th whenever it went through the 59.20 low. However, my final cut loss is the gap fill for now at 58.19, so it didn't touch that. Well, the very next day, which was Tuesday, I believe. All my days are mixed up when I live on Maui. So if I'm off by a day or two, figure it out with the chart. PVTB is now giving me a great ad signal. Why is it great? Because my risk is reduced even further. Now my first cut loss is 58.67. Then the next, it can either be the 50-day moving average or still be 58.17, whatever, 58.19, excuse me, whatever you want to use. Me, for this ad signal, it's going to be 59.67 and the 50-day moving average 58. So I'll have 3 stops currently on the books, and I'm going to split it up to however many shares I have. So if I have 300 shares, I'll have 100 shares at each stop level. But PVTB, nice bullish hammer reversal candle, kind of a test of yesterday's lows on above average volume with max green bop still in the chart. If it keeps max green bop tomorrow, it'll then make my max green bop for 5 days scan, which is always one of the top scans that I want to see a stock make, because it's just one of the better performing scans whenever stocks actually work, whenever they do come from that scan. But PVTB, CanSlim stock, perfect speculator stock, and it was only otherwise found in my tertiary scan. So it's 2% for CanSlim, 2% for perfect speculator, since it's an ad signal that gets cut in half. So it's a 2% overall long position. I'll be going long with a limit order at 59.28. Why that, not the high of the day? Because the stock is still extended from all of its short-term moving averages, the 10 and 20-day moving average. So the limit order will be 59.28 and not 59.36. So that's the highest quality long position. Now the best looking overall new long position is VHI. VHI has been in a nice uptrend since the November lows, but if you go back even further to the February lows, it's been even better. And you can see when it got to the January highs, it made over a 300% move. That's what I like to see. Now, the move on Tuesday was beautiful. I like how it's rounding up. It's kind of a V shape, but still overall it's a big rounding pattern. It's rounding up off that 50-day moving average. We can see the well above average volume, the pocket pivot point signal, and there's already been a lot of green bop, and then green bop kind of moves a little higher here, so bop is in confirmation with the price and volume move. Is there a problem? Well, yeah. I mean, I love that there's no red bop in this consolidation pattern, but there is negative bop. And it's not all green bop, and it's not all max green bop. So if we add levels to each of that, there's little problems there. But the biggest concern is that price is not touching the 20-day moving average, and always, of course, I like to see the 5 stacked on the 10, 10 stacked on the 20. Instead, the 10 is above the 5, and the 5 is above the 20. But without the intraday price pattern touching the 20-day moving average, it's technically short-term extended. So I want to get long on Wednesday morning, this morning, limit order 347. The first cut loss level is 330. Where is 330? Right there. That low. And my final cut loss level is 317. Now me, it's only 1% of my count capital. It was in the price volume BOP scan, and it was confirmed in a tertiary scan. But the PVB with the market under mixed signals, neutral and buy, it's only a 1% signal. And me though, I'm not going to use 330. I'm only going to be using 317 as my stop. But this is my favorite chart pattern of all of them this evening. Still, it's not perfect, so take that into consideration. PVTB is the highest quality long signal of the bunch. But once again, it's not perfect. Take that into consideration. The more important thing is the potential reward based on previous measured moves to my inherent risk where my stops are too good to not take on both of these positions. That's why, even though they're not perfect, they're new long positions. And if you only want to take perfect new long positions, these are not it. But this is great for the reward to risk. If it does work out, I got to take it no matter what. And then that leads us to then the next new long position, BASI. BASI was only found in my max green bop for 5 days scan because of the lower overall average daily volume, plus volume's just not existent. But with the max green bop scan, sometimes it allows me to look for the best stock chart patterns before they start to make their moves. And it's possible BASI is doing that as it's bouncing off the 50-day moving average, printing a bullish hammer candle over bearish hammer candle pattern. It's a bullish candle, but it closes lower than where it opens. This is a stronger hammer candle, and it's a candle over candle. The max green bop is good, had a previous big move up, so I have multiple support levels if it doesn't work. So BASI going long this morning, limit order 147. Once again, I'm not chasing it. Why? 147 is a high day anyway, but instead of doing 147, why not have a limit like it, maybe the 10-day moving average around 150 or even as high as 159 so you don't miss out, is extended from the 20-day moving average. Stocks extended from the 20-day moving average and it's volatile. Wherever it closes is where I try to get long, just like VHI. Even though VHI isn't volatile, it's extended from the 20-day moving average. It's a hard rule. So BASI going long at 147. My first stop is 135, this low right here. And then my next stop is 131. Potential profit targets are 187 here, 187 here, and then 242 right here. I think that this should be a gimme, so I wouldn't want to take a trade off a table. I'd expect this thing to round out or break out above this high, and then if it gets to this high, I'm willing to take profits, but I personally kind of don't want to start thinking about taking profits till here if it rounds out. Now, if it just blasts higher, if it hits this level, yeah, sure, I'll take my profits. I mean, if it just blows its wad in one day. But if it rounds out, this will probably be my only profit target, similar to NEOT, which is nearing my 259 half profit target. Hasn't hit any yet. That's my first one, so it's kind of a similar situation. And then the last position, it's an add signal to IDXG, super low risk. Go long here on IDXG, limit order 238 to close. First cut loss 230, second cut loss 224, and final cut loss 211 on the entire position. If by chance this is like your first buy, you should probably only use 230 and then 224. But me, I'm already long this name, so I'll be adding to my position. And there's a lot of max green bop in it and a lot of accumulation. And there hasn't been any real sell-off on heavy volume. The intraday price bars are very tight whenever it's around its support areas. So I could see this thing gapping up and jumping up again. And, you know, maybe it can hit the 200-day moving average or that high bar here. I mean, some targets, above the 200-day moving average, it starts to become pretty insane. You know, like here is 445, then you have 748, then you have 1425, then you have 1980. I mean, I doubt it's going to get that high, but there's always the potential for it, and that's all that I'm really looking for. All right, everybody, that's all the new long positions. 4 is actually quite a bit. They all each have something nice about them. IDXG, I love all the max green bop, but super speculative. BASI, love all the max green bop, super speculative, also not symmetrical. At least IDXG has got a longer basing off the bottom. VHI, nice pattern, but it's a little V-shaped, little choppy. Wish bop was a little bit stronger on the bottom. And PVTB, nice pattern. Not sure if it's properly symmetrical overall to that previous measured move off the February lows. If that 200-day moving average is closer, to be good. Like I said, it's all about the potential reward to the inherent risk. I don't love any of them, but they're all must takes.